So this presentation, as I said, is going to be about tax relief programs that we offer through the City of Northampton. The mayor recently presented to City Council an order to change the eligibility to make it more available to more seniors in our city. One of the exemptions, which I'll go over, which is a 41C. So the criteria for that has changed, and there's another one that he'll be proposing. So when we get to that one, I will also talk more about those changes. So this presentation is going to cover personal property tax exemptions that result in a reduction in property taxes due to a particular circumstance and the qualifications that are set forth in our state laws. Personal exemptions require that the taxpayer must show that you meet the terms of the exemption, and the exemptions are granted for one fiscal year only, and you have to file an application every year. Each program has some variations. There are different income limits and age limits for the programs, which is why this gets a little complex. So for most of the programs, the qualification date is July 1st. So you have to meet all of the qualifications for the personal exemption or deferral as of July 1st of the fiscal year for which it's being sought. The city's fiscal years run from July 1 to June 30th. And they're always named for the year that the month that they end. So the current fiscal year began July 1st, 2019. It is fiscal 20 because it ends June 30th, 2020. So all exemption and deferral applications are due by April 1st, which is why this is a good time to do this program, because you still have time to submit an application for this current fiscal year. They have to be filed annually, and they are not open to public inspection. The assessors have to keep a record book which will have the name of the taxpayer and the amount of the exemption, and that is the only piece of information open to the public. So when you file for these exemptions, any financial data or supporting documents are not available to the public. Okay, some of the requirements that these different programs use: the applicant must own the property. For some exemptions and deferrals, the applicant must also have owned the property or other property in Massachusetts for a number of years. So some programs have 5-year and 10-year thresholds. Domicile means that the applicant has to live at the property. For some exemptions and deferral, the applicant must also have lived in the property or other property in Massachusetts for a certain number of years. Some of the exemptions have a status requirement that you have to be of a certain age, be a veteran, be blind, or be a surviving spouse, or meet some other personal circumstances. You also have to provide some proof to document your eligibility. So for example, if you have a life estate, we have a scenario here where Mary, an elderly widow, deeds her house to her son John, but reserves the right to reside on the premises for the rest of her life. Is she eligible for a personal exemption? So Mary holds a life estate and has a present interest to possess, use, and occupy the property during her lifetime. Her son John has a vested remainder and becomes owner when Mary's life estate ends. That means he has a future interest. Mary, as the life tenant, is the assessed owner. Therefore, she is eligible to meet that requirement. Another example is if your house is in a trust. And in this scenario that we used, Tom is an elderly widower. He transfers his home to a trust he created that names his children as trustees and himself as a beneficiary during his lifetime. On his death, his children are beneficiaries. Is he eligible for a personal exemption? So the consequences of this action is Tom separated the legal and equitable interest in his home. His children hold legal title and are the assessed owners. The equitable or beneficial interest is held by Tom, the beneficiary of the trust. So applicants whose homes are in a trust are owners for exemptions if they hold record legal title to the home, that they're a trustee, and that they have to have a sufficient beneficial interest in the home. So in this particular example, Tom is only a beneficiary and is not an eligible owner. So if you have any complicated situations like this, Mark is here and he can go over these with you individually at the end to help you sort through if any of your situations are either a trust or the life estate. Okay, what is domicile? Domicile is the status of being a lawful permanent resident in a particular town. That means you have to physically live here, you have to physically live at a fixed place, and you have to intend to remain here permanently. Any person can have many residences, but they only have one domicile. They only have one legal residence. So if you're going to use an exemption, your legal residence has to be Northampton. Proof requirements for personal exemptions. Some of the exemptions require certificates. If you're filing for a disabled veterans must file a certificate or a benefit letter from the U.S. Department of Veterans Affairs. Blind persons, if they want that exemption, must file a certificate from the Mass Commission on the Blind. And seniors seeking exemption or deferral must file a birth certificate to prove age. Okay, so now I'm going to go through some of the local property tax exemptions. Most of these relate to seniors. I've included veterans in here because some of you may be veterans as well. Of these 5 that I'm going to go through, you are only allowed to take one of these exemptions. There's other exemptions that I'm going to talk to you about that you can have more than one exemption, but for these 5, you can only have one. So you're going to want to pick the one that has the greatest benefit to you. So Clause 41C, this is the one that the mayor recently made changes, which is why I've got two different columns here. So for the current fiscal year, for fiscal year 2020, the exemption amount is $650 off your taxes. For next fiscal year, that amount has been raised to $1,000. So if you're applying for this year, you'd be eligible, if you are eligible, you'd be eligible for $650. Next year, you'd be eligible for $1,000. The age requirement. This is another change that was recently made. Prior to the mayor filing the order in January, you had to be 70 years of age to qualify for this exemption. So for this fiscal year, 2020, you need to be 70. For next fiscal year, you can be 65. And you have to be 70 or 65 as of July 1st of the fiscal year. The ownership requirement. The ownership requirement. There's no changes here. If your home is held in a trust, as I said, you must provide a copy of both the trust schedule of beneficiaries showing that you're a trustee and have a beneficial interest. Both the trust and schedule of beneficiaries have to be recorded at the Registry of Deeds. If you're a joint owner with a non-spouse or your home is a multi-unit dwelling, that's a specific situation. You can talk to the assessors about your eligibility. So for both years, the ownership requirement is you have to have been a resident of the state of Massachusetts for at least 10 years as of July 1st, 2019. And then next year, that will be July 1st as of 2020. You have to have lived in the state for 10 years. You also must have owned or occupied your current home for the past 5 years. So there's 2 thresholds there. You have to have been a Massachusetts resident for 10 years, and you have to have lived in your current home in Northampton for 5 years. The income thresholds, and these have also changed with the new legislation that was passed by City Council. The income limits include the allowable portion of other income from Social Security, railroad retirement, or federal or Massachusetts or local government employee pensions. So for fiscal year 2020, we use your calendar year 2019 income is used to calculate your eligibility. A single person may have as up to $22,758, and a married person to qualify must have an income of $27,137. For next year, those income thresholds have been changed. So for 2021, for single, it's gone from $22,758 to $24,758. And for married, it's gone from 27,137 to 37,137. So next, the 2021 income limits are going to increase a little bit because we get the amounts that we can exempt for Social Security, we get those every year. And so we base these on this year's, but they'll probably go up a little bit. Oh, you know what? I'm one slide ahead. I'm sorry. This is income. The other one's assets, okay? So the income limits are 22,758 and for single and 27,137 for married in the current fiscal year. And next fiscal year, they go up to 24,758 and 37,137. So this is the income limits. There are also asset limits, and those have also changed. So for the current year, fiscal year, your whole estate includes the total of all savings accounts, checking accounts, certificates of deposits, IRAs, stocks, and bonds. Your primary residence, your personal effect, your vehicles, cemetery plots, etc., are not counted or included in the asset test. So for 2020, the asset limits are $28,000 for single and $30,000 for married. For next year, 2021, they have been increased to $40,000 for single and $55,000 for married. So it's our hope that this is one of the most widely used exemptions for seniors, 41C, and it's our hope that by lowering the age from 70 to 65, increasing the income limits, increasing the asset limits, and lowering the age from 70 to 65, that we will see more seniors qualify for this exemption. Okay, another exemption is 17D. If your income is too high for that 41C exemption, but you have low assets, you may qualify for 17D. This is only a $175 reduction in your property tax. So it's not as advantageous as the 41C. But again, if your income's too high but your assets are low, you could qualify for a 17D exemption. The age requirement is 70 years or older on July 1st for the fiscal year in which you're seeking the exemption. So for the current fiscal year, you would have had to have been 70 on July 1st, 2019. You may also qualify if you're a surviving spouse who is not remarried or a minor child with one parent deceased. For seniors, your home must have been owned and occupied as your primary residence for the past 5 years. There's no waiting period for an applicant who is a surviving spouse or minor child, so you don't have to meet that 5-year period. There's no income limit on this, and the value of your whole estate, but not including your home, must not exceed $40,000. So this one is no income, but there is an asset test on this one.
That also does not include your vehicle.
It doesn't, okay, Mark says it doesn't include your home or your vehicle. The same things probably as the other asset test. All right. The whole estate test. The applicant can exclude the value of their home up to 3 units, the value of other assets, real property, bank accounts, stocks, and bonds, minus the mortgage on real estate, so you can't exceed $40,000. You can also exclude from the calculation of the applicant's whole estate the combined value of the following assets: cemetery plots, your clothing, household furniture, and effects. So this is a lesser benefit, but it might work for some people. Okay, I'll briefly talk about clauses 42 and 43. These are for firefighters and police officers killed in the line of duty for their families. Clause 42 is a full exemption for the surviving spouse of a police officer or firefighter killed in the line of duty. And Clause 43 is a full exemption for surviving minor children of police officers and firefighters killed in the line of duty. So if any of those apply to you, you can talk with the assessors about those. There's a wide range of exemptions that are available for veterans. Some of these are higher amounts than the other ones that are available for seniors. So if you are a veteran and can take advantage of these, they might be worth your looking into. These are for veterans of the armed forces who have suffered a service-connected disability of not less than 10%, or a veteran who received a military decoration award. All of these exemptions are based on the veteran's status as of the first day of the fiscal year for which you're seeking the exemption. While these aren't specifically for seniors, we're presenting them here because some of you may be veterans. Clause 22 is a $400 exemption. It's for veterans with a service-connected disability of 10% or more, veterans of certain pre-World War I conflicts, veterans awarded the Purple Heart with no disability, spouses, when property is owned by the spouse who is not a veteran, and surviving spouses of Clause 22A through C veterans who remain unmarried, or a soldier or sailor who died in serving in certain pre-World War conflicts. This is available to Gold Star parents of soldiers and sailors who lost their lives in service, natural adopting and parents who stood in loco parentis for 1 year prior to the time that the deceased entered service, and surviving spouses of World War I veterans whose whole estate, less the mortgage value on the property, doesn't exceed $20,000. Clause 22A is an exemption of $750. This is for veterans and their spouses by reason of injury received or disease contracted in the service of the country or in the line of duty, lost, have suffered permanent loss of use of 1 foot, 1 hand, an eye, whether you are a prisoner of war, whether you received the Congressional Medal of Honor or other awards, and the benefit continues for the surviving spouses who remain an owner and occupant of the house. Clause 22B is an exemption of $1,250. This is for veterans and their spouses who suffered in the line of duty permanent loss of the use of both feet, both hands, both eyes. The benefit continues for surviving spouses who remain an owner-occupant. 22C is an exemption of up to $1,500, and again, this is for veterans and their spouses who suffered total disability in the line of duty and who have received assistance in acquiring specially adapted housing. And this benefit continues for the surviving spouse who remains an owner-occupant of the house. 3 more that are available to veterans. Clause 22D is 100% exemption of all your property taxes. This is for surviving spouses who remain unmarried of soldiers, sailors, guardsmen, and veterans who during active duty, regardless of when, had suffered an injury or illness which was a proximate cause of death or became missing in action with a presumptive finding of death. Remarriage does end this exemption. 22E is an exemption of $1,000. This is for veterans who, as a result of disability, contract in such service or in the line of duty, have a rating of 100% combined service evaluation or are considered totally or permanently disabled. An annual certificate from the VA is required for this one. And this benefit continues for surviving spouses who remain an owner and an occupant. The spouse is not required to obtain a VA certificate annually, however, and remarriage does not end this particular exemption. And then the last one for veterans is 22F. Paraplegic veterans by reason of injury received in such service in the line of duty or have disability rating of 100%. Benefit continues for surviving spouses who remain an owner and an occupant, and remarriage does not end this exemption. So just to summarize those, clauses 22 and 22A through F, proof of service-connected disability or cause of death, evidenced by a VA certificate or letter. An applicant must file for this information every year if it's a 22E. An applicant for other veterans exemptions must file it with the initial application only. So some you have to annually prove, some you don't. Surviving spouse must file it with the initial application only if the veteran was not receiving the exemption. So those were the veterans exemptions. They're a little bit complex and they relate to your status. So those we can answer individual questions after the presentation. Blind persons are eligible for a $500 exemption under Clause 37A. You must be legally blind and obtain a registered certificate from the Mass Commission for the Blind or a letter from your doctor indicating blind status on the first day of the fiscal year for which you are seeking the exemption. And you have to submit that exemption every year. You must own and occupy a property in Northampton as your primary residence. So these are the five categories of exemptions that I just went through. Again, you can only take one of these exemptions. So you want to pick the one that's going to give you the greatest benefit. And again, there's this 41C. That's the one that we recently changed the guidelines. So for 2021, the guidelines have been enhanced. And then there's the 17D, if your income's too high but your assets are low, you'll qualify for that. We've gone through the firefighter and police officers, the veterans, and the blind persons. Now, the next exemptions I'm going to talk about are exemptions that you can have in addition to one of these. So if you qualify for one of these, you can still also potentially qualify for the ones I'm going to talk about next. Two more things on the personal exemptions that come up. Multiple owner, these are the ones that we just went through, the 5. Multiple owner exemptions. Multiple owner, each co-owner of a property can receive a different exemption, allowing each to maximize the reduction. So in this example, the husband might be a veteran and the wife could be blind. So you could receive, this is an instance of where you could receive 2 of these. And multiple owners. Under Clause 41, 41B, and 41C, where an owner is not married to the co-owner, in this case, each co-owner who qualifies can receive a proportionate amount of the $500 exemption based on his or her percentage of ownership in the property. So that's where you can split that between 2 owners that may not be married. Okay, so now we'll go into some other programs. If you qualify for one of those, you can also qualify for these. We're going to talk about property tax deferrals and the CPA Preservation Fund, the 3% surcharge. Okay, so the senior property tax deferral, this is Clause 41A. This is where you can use the equity in your house to pay your property taxes. For this, you need to be 65 years or older on July 1st of the fiscal year for which you're seeking the deferral. The payment of any or all of your property tax can be postponed until your home is sold, conveyed, transferred to a trust, or you or your surviving spouse die, or until you choose to pay off the deferral. You can never be forced to move or sell your home under this program. You can use any single property tax exemptions for which you qualify first, and then you can defer all or part of the rest of your property tax. The interest rate on this is 5%. So during the time that you are using this program, you can defer all of your taxes, or if you qualified for, say, that 41C exemption, which next year will be $1,000, you could get that exemption, have that taken off your taxes, and then you could defer the rest of your taxes for the rest of your life. The income and assets limits for this, the current for this year is $20,000. We are sending legislation to the City Council to change this, and the mayor will be filing that next week, and we will be raising that gross limit to $53,200. And that will match the income limits for the CPA exemption as well. So currently, if you have gross income, whether you're married or single, it's $20,000. We're going to be increasing that to $53,200. There are no asset restrictions on this program. Massachusetts must have been your state of primary residence for at least 10 years. You must have owned and occupied your current home for the last 5 years. And every other person with any legal or beneficial interest in the property must give their written approval for the deferral. So if there are co-owners or a bank has a mortgage, you have a home equity loan or a second mortgage, you have to have them on board with a tax deferral and recovery agreement. The filing deadline for this is April 1st of the fiscal year for which you're seeking to defer your taxes. Property taxes can be deferred to a maximum cumulative total of 50% of the value of your home, which is generally many decades of potential deferral. Upon the death of you or your surviving spouse, or upon the transfer or sale of the home ownership, the annual interest rate on the amounts owed will increase to 16%. So what happens during the deferral, the interest rate that you're being charged on the taxes that are being deferred is 5%. If you then leave the house to your children and they wait a year before they sell it, then they're paying 16% interest. So once you are no longer the owner of the home, the interest jumps up to 16%. But during the time that you are the owner of the home, it's 5%. The deferral application process includes the following. You have to have a written agreement with the assessors. You have to have prior written approval by any joint owners or mortgagees. It is recorded in the Registry of Deeds to secure the lien on the property for the deferred taxes, and repayment of deferred taxes plus 5% interest is required when the property is sold or the taxpayer passes away. In some of the examples that I've seen where they've done the calculations, the increase in the value of the home sometimes basically kind of cancels out most of the interest. So there is that, and we can help you work through that calculation. Okay, there's also the CPA charge, which comes on your tax bill. This is the 3% CPA Act Community Preservation Fund 3% surcharge. So the way that works is currently the first $100,000 of taxable value of your home is already automatically exempted from the calculation for your CPA tax. This is called the residential exemption, and when Northampton passed the CPA, they voted to exempt the first $100,000 of value. So you're only paying the CPA on the value of your home minus $100,000. An applicant for this exemption that meets certain income limits who owns and occupies the property as of January 1st, this one's a January 1st deadline, may qualify for the low income or the low and moderate income senior exemption. To qualify as a senior, you have to be 60 years or older as of January 1st for the fiscal year in which the exemption is being sought. There's no asset limit. Owners must meet a household annual income standard for the low income or the moderate income senior exemption to be granted. A qualified taxpayer receives an exemption of the entire CPA surcharge attributable to the real estate tax assessed, regardless of the ownership share or the number of residential dwelling units. Again, the application deadline for this is April 1st, and you have to file annually for this exemption. Okay, the household income includes the income of all owners or all members of the household 18 years or older who aren't full-time students, less deductions for dependents other than a spouse, and certain medical expenses. Income must be at or below the allowable income limit for the household type. These limits are set by statute, and they are the limits based on the Department of Housing and Urban Development's area-wide median income and low-income limits. The income is based on the prior calendar year, so for the current fiscal year, FY20, we are using your calendar 2018 income for eligibility. And the income, this chart, is updated every year. So the first column, which says moderate income limits, properties owned and occupied by a senior 60 years or older, for a family of one to qualify, your income limit is $53,200. For a family of two, $60,800. The second column is for low-income non-seniors. So if you know someone who might qualify for this, please let them know about that. Those are slightly lower income limits for this is truly lower income, but you do not have to be a senior, and that income limit, as you can see, is $42,500 for a family, for one person, a single, and $48,600 for two people. So this is available to you and to others who are not seniors. Upon application and determination of eligibility for the CPA Fund 3% surcharge, the exemption, this automatically triggers a review. So if anybody applies for this, the assessors automatically review this application to see if you qualify for other exemptions, such as the 41C. In those cases where no further information is needed to establish eligibility, we automatically add on the 41C exemption to this as well. Eligibility for the Community Preservation Fund 3% surcharge exemption also automatically provides you two local additional exemptions. If you qualify for the CPA, we reduce your stormwater bill by 50%, and if you are a water customer, if you get your water through the city of Northampton, we eliminate the water meter fee on your bill. So if you qualify for the CPA, you can also get 50% of your stormwater bill reduced, and you will no longer pay a water meter fee. We'll also, as I said, review your application for your eligibility for other exemptions. Okay, there's some other programs that are, all of the programs that I've talked about are administered by the Assessor's Department. There are other property tax relief programs that other city departments do, And the senior work-off program, some of you who, I think there's some of you already participating in that, already know about this. This is a program available to seniors and veterans. So the Senior Tax Work-Off Program is administered here by the Senior Services Department. The income guidelines are based on the state median income. The eligibility for a household of 1 is 53,200, for a household of 2, 60,800, and so forth. Tax returns for the calendar year 2018 are used to determine your eligibility for participation in calendar year 20. So this is a program that runs calendar year. So if you want to participate in 2020, we will use your 2018 tax return to determine your eligibility. How it works is that seniors work for various city departments and receive an abatement on their tax bill at the end of the service period. Seniors receive an hourly rate equivalent to the state minimum wage, which is $12.75. And for this year, at $12.75, the maximum that we can give is $1,500, so that amounts to 117 hours of volunteer work. So the abatement, the maximum you can get under this is $1,500. And I want to stress, you can do this program and you can still use the exemptions that I've talked about prior to this. So if you qualify for the 41C, which will be $1,000, you can do that. If you want to defer your taxes, you could do the 41C if you qualify. You could do the senior work-off program, and then you could defer the remainder of your taxes. So you could use in this example, you could use 3 programs. The money earned through the work-off program is reportable for federal taxes. There are no state taxes. This is a state legislative program, so they do not require state taxes, but you do have to pay federal taxes. So participants will receive a W-2 for the amount of money earned through the program. Seniors have to be 60 years of age as of January 1st for the year in which they want to work. All hours of work must be completed by the participant. We don't allow someone else to do the hours for you. And you have to own and occupy the property that's your principal residence. Seniors must possess and identify skills. Different departments need different skills, so there's a wide range of things that you can do. You have to complete an application and do an income verification annually. If you work in the schools, you may be required to have a query check or provide references for certain assignments. And seniors are interviewed for job placement by the senior services staff here and may be required to be interviewed by the department head of the department in which you might be assigned. Individuals are then chosen based on the best match between the applicant's qualifications and the skill requirements of each job. There's a 2-week probationary period just to make sure everybody thinks this is going to work out. Program participants you cannot work for relatives who are employees of the city of Northampton, but if you have a relative who works for the city, as long as you don't work in their department and aren't supervised by them, you can still participate. Applicants have to reapply each year. We've never turned anyone away from this program in terms of participation. In other words, we've never put a cap on the number of positions that we have participating. This year, right now, we have 37 seniors and 6 veterans participating, which is the highest number we've had throughout the program. So applications are made available in early December. Applications and supporting financial information for the coming calendar year are due by mid-December, but if this is the first time you're hearing about this program and you still want to participate for this year, you can still apply. Program participants are notified in early January regarding interviews and assignments, and the number of hours the participant works determines the amount of the abatement for which their property tax bill will be credited. So how this works is seniors work throughout the year. You could do, depending on the assignment, the department may say, I need somebody only for the months of April and May. And you could do 117 hours in April and May and be done with it. A lot of our participants like to do it regularly. They like to do it every week. So we have people work throughout the year, January to the end of October. We end the program for the year in October because we have to, then we basically run a dummy payroll. You don't get a paycheck, but the amount gets applied to your 3rd and 4th quarter tax bills. So the third quarter tax bill comes out the 1st of January, and then the second quarter tax bill comes out, when? April? April 1st. So if you earned $1,500, which is the maximum credit, after federal taxes, it's usually something around $1,400 because the feds take their share. That $1,400 then gets divided in half, and $700 is credited on your third quarter tax bill, and $700 credited on your fourth quarter tax bill. And so you never physically get the money, but it's applied, it shows up on your tax bill, and it shows up as a credit. The Veterans Tax Work-Off Program works essentially the same way as the Senior Work-Off Program, but there are no income limits for the Veterans Program. There are also no age limits. So if you are a veteran, you might want to look, and your income's too high for the Senior Program, if you're a veteran, you could qualify under this. The Veterans Office administers that program, and they place people. Okay, so the last program is not a city program, it's a state program. It's the Mass Senior Circuit Breaker Tax Credit, and this is something that you should talk over with whoever is helping you with your taxes. The state senior circuit breaker tax credit, it is administered by the state of Massachusetts. You have to be 65 years of age at the close of the tax year. The income limits are $60,000 for a single, $75,000 for head of household, and $90,000 if married and filing jointly. These income guidelines are revised every year by the state. The maximum benefit is $1,300. For homeowners, it says $1 for every dollar that your property tax is, plus half of your water and sewer bill when it exceeds 10% of your income. And renters, $1 for every dollar that 25% of your rent exceeds 10% of your income. So the rent must be unsubsidized and the landlord must be a tax-paying entity. So you can qualify for this if you are a homeowner or if you are a renter, and if you are under those income limits and that meet that age requirement. The value of your house has to be less than $808,000. You have to know there are no other asset limits. Special provisions are made for people living in assisted living who may still own their home, and your house or apartment must be your primary residence. Homeowners or renters who are eligible for this state tax credit should claim the credit when they file their state income tax return. If you're eligible but do not normally file a state income tax return, you may obtain the benefit by filing a return and claiming the exemption. And you can amend your returns for 3 years. So, this is the end of the presentation. For applications and deadlines for those exemptions that I talked about, Mark is here. He has the forms up here. We have business cards for the assessor's office so that you'll have the phone number so that you can call. If you have any individual questions about your particular circumstance, you can come up and talk to Mark at the end of the presentation. I'll open it up to any sort of general questions in just a minute, but I did want to say if you have questions about the work-off program, you should talk to the senior center staff here. If you have questions about the Veterans Program, work-off program, you should talk to the Veterans Office staff. If you don't know where that is, I can direct you. And Chris Bissell, our treasurer collector, is here as well. And sometimes people get behind in their taxes, and we have a program where we enter payment agreements with people to catch up on their taxes. So if you have any particular questions about that program, Chris Bissell is the one to see and talk to about that. So before I end and make us, our staff, available for you to come up and ask individual questions, is there anybody who has like a more general question that everybody can benefit from? Or is everybody just overwhelmed? It's a lot of information. Yes?
Tax work-off. You said the maximum is 117 hours you would work. Can you work less hours than that?
Yes, in the tax work-off program, I've had people who, because of illness or something happened, they were only able to do, say, 60 hours, they still get the credit. It's just based on however many hours that they worked. So if you can't do the whole 117 hours, we can still find something that you can do. Yes. And we have volunteers that work in the schools. We have volunteers that are working at Forbes and Lilly Library. We have people working down at the DPW at the transfer station. We have people in the city clerk's office. I also, just reminds me before I take your question, you can also, if you'd like, sign up to be an election worker. I think you all know there's an election coming up, and the city clerk is looking for people to work the elections, and we pay hourly for that. You actually get a check. It's not going to be an abatement off of your taxes. You'd actually get a check. But we do need people for the elections because we have 7 different wards and lots of locations. So if you're interested in that, go see the city clerk. So
the income limits that you mentioned, are they analogous to the adjusted gross income that's on the Massachusetts tax return or someplace else on the return?
do you know, Mark?
I've never seen that.
Yeah, we're going to have to, because Joan is not here, I don't do that, but we will get you, come up afterwards and we'll take your number and we'll get the answer to your question. Yes.
This is a wonderful presentation, but my mind cannot take all of this in. And I'm wondering, do you have like a booklet that we can take home with us? Or, I mean, we could be calling you every day, 10 people.
Right. This is all going to, if you have access to the internet, this will all be on the website, on the city's website. The city's website is northamptonma.gov. And if you go to the city's main page, I think there's a thing that says departments. You go to the mayor, and that will take you to the, it'll be posted in 2 places. It'll be posted on the assessor's webpage, and it will be posted on the mayor's webpage under the override with all the information about the override. But we can also, if you don't have access to the internet, we can certainly print this presentation out and give you a copy. Just come up afterwards and we'll get, we can print this out for you. That's not a problem. And we can make it available. And we can also set up appointments. We'd like to have people come in individually. It's a confidential meeting because you're bringing in financial information, so the assessors will meet with you confidentially to go over your situation and help you evaluate which programs that you might qualify for.
Yeah, if you come by my office, I'd be more than happy to print you out a copy of this if you don't have the internet.
The assessor's office is on the first floor of City Hall. As you walk into City Hall, it's the first door on your right. So what I'll do is I'll have Chris pass out business cards. These have the assessor's email address, and they also have the phone number for Joan. So if you could just pass those out.
If I can just maybe make,
Oh, there you go.
one
Yeah.
little clarification. When Susan was talking about the 41A tax deferral piece and the 16%, that applies from the date of death forward.
Oh, that's if you defer your taxes.
If you defer your taxes, that's not going back retroactively. It's from the date of death going forward, if you choose to do the deferral.
So if you defer your taxes during the time of the deferral when you're still in your home, it's 5%. It doesn't go back to the first day to 16%. From the moment that the house is no longer yours, it goes up to 16%, but we don't go retroactively back.
That's
Okay.
correct.
Okay. Oh, one more question down there, and then we have one over there.
It's on. Oh, good, okay. I'm a retired teacher. I'm participating in the tax work-off program, and I share the bewilderment about all this information, but I'm very interested in 41C. So this printout that I heard, All I have to do is call or email, and I can get it at the city assessor's office?
Yeah, we can, if you want to email, we can email you the presentation. If that works for you. If you want a hard copy, just call the assessor's office. We'll have copies available as of today, so.
And
Good.
if I'm not mistaken, the senior center here, they have PCs that have online access with printers.
Yeah.
Perhaps somebody, one of the volunteers or one of the staff members here can also help you print it off here if that's
Right.
easier for you.
If you do print it off at home, make sure you put it on black and white because it'll eat up a lot of ink in your printer,
The
so.
second question, this must be the retired teacher in me. You had said that these things will be available on different web pages. Will be? Are they there now?
They'll be there by midday today. We just, yeah,
Sometime today.
Yeah,
Awesome.
yeah.
Thank you.
yeah. And there was a question back there. Yeah, whichever way is easiest for you, we'll get you the information. So if you want it emailed, if you want a hard copy. Okay, you had a question.
Thank you. This was an excellent presentation. We were hoping that the mayor would come and talk to seniors during the day about the override, but you're here and this is important, and hopefully you could do this presentation again maybe in November or September when people can get ready to start applying and meeting those deadlines.
Yeah.
But as we go into the next election and we're looking at the override, I think some important things that voters need to know about and keep in mind are things that affect seniors, like Data USA says that the largest group living in Northampton in poverty is females aged 55 to 64. That's something to keep in mind when you're doing this vote. Infoplease.com data says that 46.5% of homes are renter occupied in Northampton. 46%. How many people's rents will go up? Census.gov, 65 and over, that age group in Northampton represents a little over 16% of our community. That's a lot of folks who need to be concerned about taxes going up. The total population of females in Northampton is 56%. So now if we're looking at that group living in poverty, that's really of concern to us. The last thing I just want to mention is that the community action stats say that wages in Western Mass are 30 to 55% lower than in the rest of Massachusetts. So let's keep that in mind, folks, when we're voting for the override or against the override, please. Thank you.
Okay, thank you. And we plan to do this presentation more frequently because I think that there's definitely a need to keep this before seniors as to their options. And as more people become seniors, they're going to want to know about these. So we'll be back for this presentation. So I'll take one more question.
Okay, this is a quick one. What is considered income? Just Social Security, or Social Security, and what other kind of sources of income are considered?
It's pretty much all your gross receipts. So wages, salaries, bonuses, commissions, public and private pensions, Social Security, alimony, child support, lottery winnings, interest and dividend income, capital gains, life insurance proceeds, net income from business or rental property after deduction of related business expenses and losses, public assistance, disability payments, unemployment compensation, workman's compensation, regular cash or financial contributions or gifts from family or other persons outside the household, and any other income. So everything, pretty much all.
Regular.
That's a good question.
Yeah. Yeah. And I'm going to have people come. Do we have one more general question, and then I'm going to have people come up. Again, we're at a little bit of a disadvantage because Joan is not here, and Joan has been an assessor for 47 years, so she knows this stuff backwards and forwards. And believe me, she'd rather be here than where she is right now. So,
I just wanted to know, do you have to apply for the CPA exemption every year?
Yes.
Once you're in our system, we mail you automatically whatever, say if you have the 41C or the CPA, once you're in, we mail you the applications.
Yeah, the assessors are very good at tracking down people so that they make sure they remember to apply.
And we call you if you haven't turned it in.
Yeah. Yeah.
Yes.
Oh, okay, Chris, I guess we have one back there, one up here, and then one back there. Yep, there you go.
Okay, thank you. I have a very special interest in this program. I used to live in Natick, and I participated in the program, and it worked very nicely for me for over 5 years. And I have found resistance, a tragic sense of lack of worth by the director of the senior center, and I have been rebuffed, and I subsequently had to see an attorney, and I subsequently filed charges at the MCAB, and I don't want to be part of that. I just want to work for the senior center, and I'm wondering if there is any person in the middle that I could go to that would understand that I'm highly capable, that I really qualify, and that I really need the money. I need help.
Okay, we can talk afterwards. Chris, I think there's one more question up here, up front here. Yeah, just.
I just wondered when you mail out the CPA tax renewal abatement, whatever it is.
I believe they're mailed out around, I can't honestly.
So the question is, when do we mail out the CPA one? And it goes to people who have already applied. So we don't generally just mail it to everybody.
I'm getting it also, but I haven't received a renewal, so that's why.
Oh, okay. Yeah. So when do you mail it out, do you think?
I mean, it's definitely not till after May.
Okay. Okay.
You already have yours for fiscal year 2020?
It came off of my bill this.
Yes.
Okay, so you're already getting it for this fiscal year,
We
so.
have not mailed for fiscal 21, and we won't for a
Okay.
couple more months.
All right. Well, thank you, everybody, for coming. This has also been recorded by our cable channel, so if you want to watch it again. But again, we will do everything we can to help you figure out if any of these programs work for you. So please come up and talk to Mark afterwards, and we have applications up here as well.